Hello everyone, today's video is all about entrepreneurs relief on partnership assets. So I think many are probably familiar with entrepreneurs relief, which is the lower rate of capital gains tax which you get when you sell business assets. Now, a lot of people are familiar with the shares. If you own a business, you got shares in your own company and you come to sell it, then you pay 10% capital gains tax on the gain on those shares when you sell them, provided that you own at least 5% and have held the shares for 2 years. So the vast majority of business owners selling shares in their company qualify for entrepreneurs relief. But it also applies to business assets not held within a limited company, so not shares. So let's say you are a partner in a partnership. So partnerships, there's no shares involved, but you can still sell partnership assets and still get entrepreneurs relief. So this particular case that went through the courts that I want to tell you about concerned just that. So the disposal of partnership assets. Now, in theory, that all still qualifies for entrepreneurs relief if the conditions are met. Now, in this particular case, this was an accountant like myself, and this accountant sold assets. He sold an interest in his business. In other words, he sold goodwill. So what happened was, in the mid-90s, this guy was thinking about retiring way back then. He brought on board two junior partners, and he said, look guys, you can buy me out over 20 years. That was the arrangement. Give me 20 grand a year for 20 years to basically be bought out of the business, 400 grand. And that, that is a disposal for capital gains tax. But that in itself wasn't the issue here. What was the issue was the following. The fact that when it got to 2017, 2018, and he disposed of all of his share in the partnership, he duly received 20 lots of 20 grand, 400,000 over 20 years. He then said, right, I also own the building of which this accountancy practice trades from. I would like to sell that to my pension. It's a common thing with business people to sell a commercial property that they own personally into their pension and then lease it back to the business. So that's what happened. He sold the building to his pension fund. The partners who were remaining in there in that accountancy firm leased it back. So they rented from the pension fund. Now, on his tax return, he claimed entrepreneurs relief on the disposal of the building. And he said, look, this is part and parcel of my disposal of the wider practice. I've been offloading my accountancy firm to some new guys over many years, and I'm finally selling the building at the end to my pension fund. But again, I would like favourable capital gains tax, because capital gains tax on building sales, commercial building sales, 20%. That's the default position. But if it's part and parcel of a wider business sale, then the 10% entrepreneurs relief applies. HMRC looked at this and they said, no, you can't have entrepreneurs relief on the sale of this building. We're going to hit you for 20% tax, not 10%, because it's not part and parcel of the disposal of your business. He said, yes, it is. HMRC said, no, it's not. They all went to court, and the first tier tribunal have just recently released their decision, and they actually sided with the taxpayer, and they said, look, there is nothing in law that says anything about the length of time, the fact that he first started to dispose of the business in the mid-90s. It took him 20 years to get rid of it, and then he sold the building. The law says that it has to accompany the disposal of the business. So HMRC said, look, the disposal occurred in the 90s. You can't have favourable tax relief offloading the building 20 years later. But the courts disagreed. They said, look, he was trying to get out of this, for want of a better phrase, get out of the business for 20 years. So the whole exit, the whole disposal of the business, you don't look at the start of it, you look at the end of it. He finally got out, sold all of his shares, 2017, 18. Then he sold the building, and that was part and parcel of the disposal of the business. So taxpayer won. Now, will HMRC appeal? They may well do. Normally, as a rule of thumb, you need to dispose of a building within 3 years of disposing of the business. That's what's written in the legislation. So you sell your business, as long as you sell the property within 3 years of that business, you normally get the entrepreneurs relief. In this case, HMRC argued there was 20 plus years. He said, actually, there's hardly any years. There's no years because I sold it right at the end of the period in which I sold out the business. So HMRC lost, taxpayer won. The court said, yes, that's right. So the timing of the sort of the clock, as it were, is at the point that he disposed of the last of his interest in that partnership. So just something to look out for there. If you are a sole trader or a partner in a partnership and you have business assets, particularly property, and the timing between selling your business, your assets, your goodwill, and any property, and making sure that the timing is not falling foul of the rules. But just an interesting case there on interpretation of what we thought the rules were. What is the point at which you exit, you dispose of your interest in the business? Because this thing took so many years, it was argued that it occurred at the end, not at the start of that period. It's quite an unusual case. Most disposals will happen over a very short time, 1, 2, 3 years max. It's quite unusual for a guy to be bought out over 20 years, but that's the facts of the case. So if you like this video, please do subscribe right about there, and I'll see you soon.